So Australia's 2026 property market forecast. Let's unpack what the data actually says.
I mean, if you're having no rate cuts with high inflation and you still got 8% growth,
Very
it's
good.
a strong market.
Yeah. So for 390,000 people coming into Australia, we would need 150,000 homes just to account for next year's forecast.
I would like to know what it was based on, because if we've fallen short every single year, what's going to change this year?
Even our worst case scenario is still good.
Our worst case scenario is 6% growth.
Yeah.
We're just not keeping up with supply.
Vacancy rates are extremely low. Listings are far below average. Rent has gone up 6% in 2025.
Yeah.
So all things are pointing towards being Australia's hottest market
Still
again
significant
for 2026.
Growth. Yeah. So every year, Christopher from SQM Research releases a boom and bust report. He gives his past year predictions, not predictions, but how it actually tracked.
Yep.
But then the following year predictions. So today we're looking at the drivers behind them, city by city predictions, and then the overall outlook for the market.
Yeah. So again, not our data. So yeah, SQM, we are unpacking that for them or with them. We'll get straight into it. So one of the biggest things that in the forecast was population growth. Obviously, population growth has a direct link to property price growth.
Yep.
So in 2024, there was 445,000 people immigrated into Australia. There was 440 in 2025.
That was expected. I think it was actually more than
I
that
think it
slightly.
it was a bit more. I think it was around 480 or something, wasn't it, from memory?
Yep.
The forecast is slightly lower for next year at 390, but it's still massive.
It's still massive. It's still well above average. And 390,000 houses, we've spoken about it before, and I think we touch on it here with the building completions. We're just not keeping up with supply. And it's a shitload of people coming into the country.
The key states that are getting a lot of that was it Queensland and WA. Yep. So New South Wales does have gains from migrants from overseas, but the state-to-state migration, is from Queensland to WA and WA majority-wise. So the impact of that is currently there is 2.6 people per dwelling in Australia. That's the average. Yeah. So for 390,000 people coming into Australia, we would need 150,000 homes just to account for next year's forecast.
One thing that he doesn't take into consideration is the micro specifics with those demographic makeups. One of the biggest things that it isn't highlighted in here is that we have an aging population. A majority of the aging population don't have kids in their houses anymore, but so that the housing makeup is actually 1 or 2 person households. He's going off an average of 2.6, basing it on mainly family premises. Yeah. But we have an aging population. This is just for 2026, but for the next few decades, we have an aging population, and most of them are just childless households. So the makeup is slightly less.
It pulls that average down.
Yeah.
So then we look at what he's predicting for housing completions in 2026. So he's predicting around 185,000 completions, which does give us technically a surplus of housing just for that year, though. Yeah. Let's remember too that there is also backlogs of housing and I wouldn't say it's going to be a surplus.
It's a yearly surplus based on a year-to-year date.
Correct.
Not the backlog of the shortage that we already have. Right now. But again...
And we are still well short of the government's forecasting or requirements for 2020.
I would like to know what it was based on, because if we've fallen short every single year, what's going to change this year?
Again,
but we'll see.
Not our report. We're just going through it, but that... I don't particularly, I'm not super confident on that one, to be honest, that there's going to be 185,000 built across the year.
It's not only for house prices, but it's good for the rental market, because the rental market is just tight across the board. We need more properties, but forecast scenarios, so based on different economic outcomes. So base case, which is the most likely, is a 6 to 10% national dwelling price increase. That's with a sluggish economy, inflation easing to 2.5 to 2.7%, which is roughly the average, but still above where the 2% level that they want. 1 to 2 rate cuts mid-2026.
Yeah.
And a population of that 390,000.
So that's the most likely.
Yeah.
Still very strong, between 6 and 10.
Absolutely.
And that's average too.
Yeah.
So the scenario 2 is if inflation stays a bit sticky, there'll be less or no rate cuts.
Yep.
And growth will slow down between 4 and 8, which is still very good.
I mean, if you're having no rate cuts with high inflation and you still got 8% growth,
very
it's
good.
a strong market.
Yeah. So global slowdown. So this is assuming that we have some sort of global slowdown.
Yep.
But if that happened, we know that rates would actually cut because
Absolutely.
they want to spark our economy and
Yep.
not be part of that. So they're predicting growth of properties would be between 6 and 10%.
Which is the base case
which
scenario.
is very, very similar to that, or is the same.
Yep.
So if there's an economic rebound, all of a sudden the economy kicks off again. We've got wages are up, rates are down, inflation's going really well. It would sit around 10 to 14%. That's a best case scenario. Probably not likely.
Which 14%. That's double the average yearly growth. So
if we unpack that, even our worst case scenario is still good.
Our worst case scenario was 6% growth.
Yeah, or four in the if there was a slowdown.
Okay.
Yeah, the sticky inflation was 4%.
Yeah,
which is still good.
Yeah, 100%.
So
4% of
you've got to remember that's an average too.
Exactly, and you're talking 4% of house prices in Sydney, say, or even house prices in Perth. They're getting up there. You're mainly talking about $1 million for family houses. But city by city predictions.
Yep.
Perth, we're flying west.
Yeah,
straight up.
12 to 16%. So that's again massive. I don't know how this place just keeps going, but it does.
Population growth of 2.3%. Demand is circa 28,000 dwellings.
But they're predicting only 20, so there's going to be a shortage
a major
again.
shortage. So there you go. That's one of the major factors.
Vacancy rates are extremely low. Listings are far below average. Rent has gone up 6% in 2025.
Yeah.
So all things are pointing towards Perth being Australia's hottest market
Still
again
significant
for 2026.
Growth. Yeah.
Brisbane.
But again, just touching on that, this is where people buy wrong. They go and buy in a market that is continuing to grow, but it's had significant over the past 5 years. Are you buying in a contraction market or a growth market?
We'll see.
We'll see. Let's move on.
So Brisbane, again, very strong, 10 to 15%.
Yep.
Population growth 1.8, vacancy rates below 1%, rents up 7% this year, and listings down 17%. So again, there's supply. Supply just isn't catching up with the demand.
Yeah. And I mean, vacancy rates and rents up, that's purely on the leasing side, but listings down close to 17%. Like there's just no stock.
There isn't, because people can't afford to upgrade.
Yeah.
The affordability is still an issue in Brisbane.
Yeah.
And people are just hanging on because what's the point in selling when you're just going to buy sideways?
Exactly.
What's the point?
Yeah.
So you just hang on to it.
Adelaide, 10% to 14% growth. Again, vacancy rates hovering around that 1%. Demand 5,500 dwellings. Supply 4,800. So there's an imbalance there straight up. Again, rents are up, but again, listings are just down.
Yep.
So and that's across the board. It's just
and Adelaide's quite an affordable market in comparison to other capitals. So I think I agree with that one. Adelaide, I think, will do, in my opinion, do well.
They need to sort out their marine life, but
yeah. There's Darwin. It's an interesting one. So 12 to 16% growth. So that's a huge. They're basically saying there's going to be a 17%.
Well, there was a rebound of 17% in 2025.
Yeah.
And that's going to continue in 2026.
Yeah. It's huge. So it's 0.7% vacancy rate, 8% rent increase this year. And there's some gas projects going on up there that are really taking up.
That's one of those things where you've got growth, but majority of the infrastructure or employment driving that marker is that gas project. Again, that's one of those other factors that you consider. Risk factors that people don't talk about. Liquidity is one, which is a big factor for Melbourne. But Darwin, there's a lack of economic diversity there. What happens after that gas project slows down?
Yeah.
And one of the other factors is that 43% of loans were for first home buyers. So what happens when first home buyers and that gas project slow down in Darwin?
Yeah, it's catching up. I think it's catching up with the rest of Australia.
Sunny Coast.
10 to 15. Gold Coast, 7 to 11. Again, very strong across both of them. Sydney, a little bit slower in comparison between 3 and 6. Again, I think affordability is the major strain on the growth in Sydney.
Yeah.
They're already prices are already at an unachievable
and
high for most people.
We actually did houses versus apartments last week. Go and check that out. But I went through all of the suburbs that he listed as a star rating for this report, and majority of Sydney, a lot of the good suburbs like Coogee, for example, house prices have increased across the board for the last 3 years, whereas other suburb house prices have come down. But apartments have actually tracked a lot better, and apartments have had more growth during 23, 24 and 25 than house prices did. So interesting to see what will happen with apartments versus houses, especially and with different markets within Sydney.
Yeah, because it's gonna the more affordable property types are gonna do better.
Yeah,
because you just can't purchase some of those houses in some of those locations. Yeah. It's too expensive.
Melbourne, 4 to 7%, which is, I mean, it's pretty standard. If they get 7, that's great. But again, one thing for Melbourne was that supply is actually there. Supply has been pretty steady across the board for the last decade. Everyone blames the government for Melbourne's property market.
Saying that though, one of the biggest, like I speak to obviously a lot of people wanting to invest, and one of the biggest reasons a lot of people don't want to invest in Melbourne or Victoria is because of the high holding costs.
And that's the thing. Melbourne has pretty inferior yields, relatively speaking. I can get better yields in New South Wales and a lot of places in high growth markets in Melbourne. So when you've got the lack of yield and the fact that you're paying land tax from, I think it's a threshold of $50,000.
Yep.
It doesn't really make sense in many respects because you've got those holding costs. So all of these other markets like the Gold Coast, Sunny Coast, Perth, Adelaide, they're more affordable markets. They've got increased yields, so a lot of investor money is moving to those markets. And like we spoke about last week, the investor loans have increased 7% last quarter, 17% last quarter. So if that investor money isn't moving into Melbourne, that's a big portion of the market that isn't being influenced from that investor money.
100%. So I think that would be, if they eased up a little bit on their taxing and stamp duties and stuff like that, I think their market would absolutely explode.
Yeah.
But Hobart between 4 and 7%, Canberra 3 and 6. So that's pretty much the wrap up from the SQM report. If you haven't read it, literally just Google SQM boom and bust report.
Well, it's actually $66, but if you want it for free, send us.
You've just watched it.
You've just watched it, but send us a comment. We can send you it.
But it's good data, and yeah, thanks to the guys at SQM for putting that together. And
absolutely,
we'll read the next one. I think we should go back through it at the end of next year and see how close it was.
We will. We might do a review it in 6 months, but across the board, basically between 4 and I think it was upside of 14% national growth.
I think people just need to acknowledge that these are all predictions. This isn't what's going to happen. This is what one person is predicting could happen. Make educated decisions and
absolutely,
get in contact with people that know what they're doing.
Exactly. Yeah.
And that's it for the day. Thank you.
Cool. See you on the next one.